Hello traders, wonderful weekend. Vladimir Ribakov here from Traders Academy Club. This is the weekly forecast for the week starting of 23 to the 28th of June 2019. As always, we will be reviewing the previous week trading ideas, see what worked, what failed, what's still relevant, what has to be upgraded and updated, and we'll prepare our trading plan for the coming week. On Monday, I will be publishing my weekly forecast in a text format, so just come back to the video, and below in the description you would find a direct link to this article, to this post, or just go to the blog vladimirribakov.com and you would find there on Monday this post published. So scroll down and you would see the forecast in a written text. Please note, this is not a replacement to the video, it's a summary, so you can always go back and refer to that for a reminder. Let's begin. We had a very fundamental week. A lot of things happened. It started with Draghi and his attempt to devalue the euro and to take some further actions. It continues with the sensitive relations between US and Iran, the so-talked attack, which took the oil prices upside. Of course, the Federal Reserve, which was very blurred with his words, but yet the market is reacting as to a very absolute decision for cutting the rates on July, and a lot more to come on this week as well of the fundamental. So let's start reviewing our previous ideas, update them, see what of them are still relevant for us and what of them would have to be updated. Then I will share a few more interesting ideas coming in the markets right now. So the first one was the euro versus the pound. We wanted to see another climb as close as possible to the 0.90, and then we wanted to see the break of the lows or the trend lines and start looking for the sells. So let's take a look on the euro versus the pound. We got this rally, we got the breakout of the trend line. Okay, as you can see here, the pair does not really obviously making any new lower lows, but we definitely see that the bulls are seriously under resistance right now from the bears. What else did we have? We have 20 candles ride on the Bollinger Bands. We had a beautiful divergence, beautiful candle pattern, and call it a kicker. It's a black cloud with one more verification candle, which brings in the bearish power. The weekly chart is a bearish hidden divergence, and by the way the daily looks like, it is best to look for sell setups. So what are the options we might be exposed to? First of all, this could turn to be some kind of a head and shoulders pattern, and if we break this neckline, we can start looking to sell the rallies. We can see the pair trying to fight and maybe even trying to make one more false breakout. That's acceptable, and yet the way the pair is structuring on the higher time frames, the best thing to do is to look for the bearish setups. My personal view remains bearish, looking for sell setups. We also have to pay attention to the statistical days. Let's take a look on the statistical days. and that's 27 onto 29, right? And that's during this week. That's why I think this area is critical. If this area will not hold and we will see straight breakout, the next critical zone, look further. It's much higher above the 090, closer to 091. So it is still possible to be done, but as I said, due to the sequence of the things from the higher time frame, I would be looking for bearish evidences for sell setups. Trendline breakouts, lower lows, sell the rallies, hidden divergences, any bearish evidence that you work with is acceptable for trading in such conditions. Next one was the euro versus the kiwi. We were expecting for the price to rally, come closer to this box, as closer as possible to 175. So by the first time it visited 173, not really obviously close to 175. And then we wanted to see the trendline breakout and sell the rallies. So we got a trendline breakout right here. We got a beautiful move since. Now we are getting the rallies. The problem with this rally, it's pretty straightforward lag. I would like to remind you that according to the Fibonacci levels, there is a possible room towards the 175, as mentioned in the previous post, or at least close to that. So by theoretical view, we could still see the pair trying to climb here. But as with the euro versus the pound, the fact that the weekly is currently building up a bearish hidden divergence, the fact it has its resistance zone right here, the fact that the daily chart has its divergence and the cycle zone would make me, exactly as mentioned in the previous week, look to sell the rallies. That the ideal setup here would be to get some kind of two waves and get a breakout. That would be the ideal setup. Of course, the alternative could be some rally and lower lows. Another great setup. We also have to remember that we already had one false breakout on the top. We already had one false break on the bottom. So we can continue to play here also as a range. This or other way around. The corrective cycles that are acceptable in such situations are two waves down or a range. Due to the sequence of the things, sell the rallies with bearish evidences is the right thing to do. And we have critical days 24 for the sells. Note how was the first one, topping on the 17, the B is spiking after that between 17 to 20. These two critical days, as you can see. Very powerful statistical call. Great drop down. Now rally again. 24 is the next critical time. And if it doesn't do that, then we will see this week restructuring itself. And by the beginning of the month, providing us the shot. But, as I just mentioned, sell the rallies. Even if we get a new spike, I'll be looking here for sell setups. New Zealand and Canadian, wonderful sell going on. We've been riding this one, expecting it to continue lower. I would expect it to 0.85 as long as there will be no signs against us. However, after a beautiful ride, we do need to pay attention to this divergence coming in play at the end of this day, Friday. Beautiful candle pattern. Beautiful hold over this supportive area and the 4-hour chart that completes here a trendline false breakout, which comes the second false breakout after this horizontal one. We do not have yet any trendline breakouts. So basically, if we manage to climb here, that could be some correction time before further sells. So short-term corrections are acceptable at that moment, and then further sells. But it will take time, so we will follow up and update. Pound versus the Aussie. We had two critical zones where we wanted to pay attention to and look for sells. So this is the area around the 200 moving average. So we can see that by this cycle, of course by the next measurement. So we got the bounce from this area once and then twice. Nothing really significant since. We never got a trendline breakout on the bigger scale. This is a triple cycle, so double wave correction is a good thing in play here. Again, no trend lines, no lower lows since this leg is developing, the second one, in a bigger scale. So for us, for my point of view, we're still after sells here. Weekly cycle suggests that. Would expect this. And the daily is basically making this straight leg correction, looking for sell setups. So the best thing to approach here is to look for some lower lows and then sell the rallies, or follow up into the deep correction, breakout, and sell the rallies. Okay, specific days I want to pay attention to: the 20s, secondary class, the main class, the beginning of the next month, that to happen a week after. There is a good chance we are going to dance around here and make the movement by the next week. Good chance for that. So what we want to do is get prepared for this opportunity. It can dance around here, no problem with that, and looking for the sell setups right after that. Not much as for now for the pound Aussie that delivered us. New Zealand dollar, after making zigzags back and forth, we were expecting sell the rallies to continue further until and as long as the daily divergence would not hold right here, as you can see. Okay, on daily chart, I'm paying attention for the divergence shown. Now this is exactly what happened right at the beginning of the week, right? We never got a continuation down and the divergence sticked right away. So the sell idea immediately terminated. So what's coming with this pair? We might be exposing here for some correction. 4-hour chart is building up some kind of structure. If this high is broken, then we can discuss about rallies, lows to be bought. So one more high to complete 3 higher highs, higher lows, drops, buys. That could be our plan as the daily divergence ticked in. And the euro versus the dollar was one of the rock stars. I was expecting, I was holding my bullish view, expecting it to go for 2 waves up, 1, 2, and that's basically what happened since. Now pay attention that I'm always talking about bullish evidences. These become as bullish hidden divergence, classical call. 4-hour chart, the lower time frame has to verify that, and it does amazingly. Trendline is broken and we are flying up since. So what's the view here? I remain bullish on the euro dollar. I expect from the double cycle from the weekly chart, I expect it to climb higher. The 114.50 area would be first critical area. 116 might be the next one. My personally bullish view at that moment remains on as long as this trend line holds. This would be the invalidation. Dollar CAD. This is our idea. Sell the rallies. And the 61.8 of the 4-hour chart was the critical area we were talking. So it has to hold. So here we are. Boom. And one of the best trades this week, about 300 points to the downside. And the 4-hour chart managed to hold the 61.8. You see how critical it is. Clean this area. Crushed all the way down. So what's next for this pair? I think there is more room to go lower. And from my point of view, it's still bearish. Definitely great risk reward in such situations to put money in the pocket. And just enjoy the move. As simple as that. Now, 20 seconds of your time. If you are new to the channel, I would like to invite you to subscribe to the channel to get my videos and my work notified for you. Just remember to enable the notifications and allow the ring, okay? And I invite you to join the free Telegram channel we have for the community, where we share trading ideas, articles, videos, strategies, and many more great things. To join us, just follow the link below in the description. Also, I would like to invite you to join the live trading rooms we are holding on daily basis, and including the trading reports with all our setups. Next pair on the list, Euro versus the Aussie. The critical zones are marked here. And we were looking for sell setups at that area. So we reached the zone right here. Amazing candle pattern. No lower price-ins. We had beautiful convergence. So sell setups are in play here. This is the pullback, break below the trend line, and we have a great sell opportunity. If this area is broken, then we are likely to see another climb closer to 165, 166, and yet I think sells to follow from there. For this pair, exactly like with the Euro versus the Kiwi. Wait. Disappeared. Let's see. Yeah. For this pair, there's the two critical zones to look for the sells. And this is the massive trend line we have right now after the pullbacks. Okay, we got the convergence, amazing setup. It has to break it down, and we are bearish. If it climbs higher, no problem. Let it, like with the Euro Pound, like with the Euro Kiwi, until the next bearish evidence comes in play. Sell the rallies is the right thing to do here with bearish evidences. I think do it the other way around. I'll click from here and it should open all of them. Yep, good. Next one, Aussie versus the Kiwi. The expectations were to see 3 higher highs and higher lows, and for this trend line to continue the rally. So let's take a look here. This trend line breakout failed. We never managed to get higher highs, higher lows here. So this idea failed. My personal view for the long term remains bullish. This is the trend line that still comes in play. And once it's broken, I'll be looking for my buys again. At that moment, neutral. Aussie franc wanted to go long with the break of the trend line. The trend line was broken wonderfully, but no momentum gain since. This trade failed. What's next with the pair? We are still dancing around the critical zone. 61.8. good chance we're going to get it lower a bit. And as closer it comes to the full duplication, and the closer this divergence becomes in play, the stronger the rally will be expected. So, nothing for me at that moment this pair, going neutral after the first opportunity failed, and we'll be looking, for the next trading opportunities. Now, before I move to the great commodities that paid big time, two new opportunities on the list. First one, pound versus the Canadian, holding a beautiful level of 167.50. Cleared two stop losses areas here and here on the way down, making here a kind of a structure of triple cycle. Beautiful divergence in play, great engulfing. The way I expect that is to make a corrective cycle on the shorter view, meaning two waves or some sort of a range here. Short term, I would expect retraces to the upside, and we'll be looking for buy setups. Next one is the euro versus the yen, which we were neutral in the previous week. Beautiful hold here with a double bottom around 121, very close to the psychological 120. Weekly is still suggesting its histogram divergence. 4-hour chart making the false breakout and the higher highs in play. Beautiful scenario, and from my point of view, it's bullish for a bullish correction. We'll be looking for buy setups. Silver and gold. As I mentioned the previous week, I remain bullish in my view, and I expect it to go further up. And patience pays off. Silver should to the upside. What's next? Triple cycle, double cycle correction, 50% retrace reached. Bearish hidden divergence. No clear continuation at that moment. For me, it's a sign of neutral. Now, because the higher time frames are all supporting the upside, I would never close a full position here. Partials. Partial cash out, and the rest remain to run. Same with the gold, which was under bullish. My view remains bullish. We'll be looking for any retraces with bullish evidences to continue. We got a beautiful trend continuation here with temporary stoppage and immediate breakout. So the gold, I want to remind you, we are bullish from that place, from here, and then for bigger view with this breakout, the final breakout. It's going great so far. Amazing risk reward already achieved. I believe there is more to come. Temporary retraces are acceptable, for very likely for further continuation up. My view remains bullish. Dollar versus the index. Wanted to see 4-hour chart making two waves and trendline breakout. Let's take a look what happened since. 4-hour chart did not make deep two waves, made it this way, and then break of the low and continuation. So far so good, and I expect it to go further down and reach 38 or 50% all the way down from the weekly Fibonacci. So I hold my sells on this one. There is nothing at that moment from the indices that I find worthy. There is one more interesting, mainly from the fundamental aspect with the all the pressure we have with USA and Iran, I think the oil could be continuing its journey to the upside, and I would be looking for possible bullish retraces. So retraces and buys here. I suspect this one has further upside move, very possible to happen, and I think it should be achieved this way. So retraces with bullish evidences would be looking to trade it to the upside. So that's pretty much the opportunities as we have them on the charts as for now. Pay attention to the fundamental events for more great opportunities, setups, ideas on daily basis. I invite you to join the live trading rooms in the Traders Academy Club. To do so, just follow the link below in the description, and I'm looking forward seeing you with us in the live trading rooms. That will be all for this weekend and for the coming trading week. I hope you enjoy the work. If you do, it would be great if you can show your support back, hit the like button, leave some comment below. It would be much appreciated. Thank you very much for your time. I wish you a wonderful trading week, and I'll see you around. All the best. Yours, Vladimir Ribakov, Traders Academy Club.